Hello everyone, my name is Sheridan Plummer of First National Bank, and welcome to this week's special edition of First National Banknotes. Last week, we opened the doors to the discussion that took place on de-risking at the 2018 Stanley Friend Shareholder Education Forum. Today, we're going to continue with part 2 of that very important subject matter. So stay tuned for the details in this new 2018 edition of First National Banknotes.
A vision anticipates what may become reality. With First Future Land Loans from First National Bank, you too can envision your future home. All you need is 5% deposit and we'll give you an attractive repayment plan of up to 20 years, plus more great benefits if you build with us within the first 5 years. Our lending process is quick and hassle-free. Buy the land for your dream home today. Your future starts right now with First Future Land Loans from First National Bank. First National Bank, here for you.
Welcome back to First National Banknotes. Just to refreshen your memory, the keynote speaker for the 2018 Stanley Friend Shareholder Education Forum was the bank's current Managing Director, Mr. Johnathan Johannes. Here's part 2 of his presentation on de-risking.
It's not easy for a banker in today's world. We have so many rules and regulations to comply with. We have so many people to be on the lookout for that it's really a case where it's no longer innocent until proven guilty, but it starts feeling like you're guilty and you have to prove yourself innocent. And that could have a negative impact on the customer's experience. We as a bank must try to find a way to navigate what I would have mentioned earlier, that known to me element of indigenous banking and the KYC element that the law mandates. And as much as possible, find intelligent ways to gather the information without coming across as dogmatic on the customer. We just need to find creative ways to get the information that we need without really making it onerous on the client. But at the end of the day, we must comply with the law. And at sometimes we will write to a client and ask for information. We will turn down a transaction if we don't have enough information. And it's not a case of us being harsh or wanting to embarrass a customer. It's just a case of having enough information to comply with the local laws, one, and to satisfy the correspondent banks. Because people think correspondent banks sit out there in Miami, in London, or wherever they are, but they actually come to the Caribbean. So you must have enough information at hand at all times, so that if by chance that correspondent bank picks up the phone and calls and says, we have issues with those funds that are destined for Syria, what can you tell us about it? We are able to answer every single question they may have. It might be some UN funds going to assist refugees in Syria, but you must have all the details. And that's why we asked for all that we asked for.
And now we know why, right? I'm going to get positive though, because there's got to be something good about de-risking. What is the upside? Are there any upsides of this de-risking movement?
You said you wanted to get positive and you asked for upsides, right? I don't have too many upsides about de-risking, okay? So I normally try to find silver linings around de-risking, but they become in few and far between. What I would tell you is some of the downsides, yeah? Okay, so let me do some downsides and I'll pepper in the 1 or 2 upsides that I know. So downsides, I would have touched on one. It has the potential to kill off entire industries and economies, okay? So I'm trivializing it by saying it quickly because I hate talking about it because I'll lose more sleep if I talk about it too long. But in addition to that, I see de-risking as a modern day barrier to entry and keeping small businesses and small banks out of the big leagues. So if you think about it this way, let's look at St. Lucia and banking in St. Lucia. So you have the most indigenous bank, the only indigenous bank, First National, and you have the other guys, Bank of St. Lucia. Then we have the three Canadian banks. The most likely banks to be de-risked are First National and Bank of St. Lucia. If we become de-risked, in essence, what we become is a savings and loans institution, right? We no longer a bank. We can't engage in wire transfers, drafts, and foreign transactions. We may then be forced to do what? Merge with an international bank, sell our interest to an international bank. So de-risking has the potential to force consolidation in the industry. So whenever you hear talk of too many banks in the marketplace or too many banks globally, de-risking has the potential to force banks out of business, to get them to be absorbed by other entities, or to get some de-risked indigenous institutions in other markets to seek out other indigenous institutions that maintain relations and amalgamate. So it contracts the industry, the number of players in the industry. The international banks who are de-risking us are the ones who have been fined for lax controls. Who's de-risking them? Okay, no one, right? But they are the ones sitting back and saying, I'm going to cut off these channels to you, you're going to go out of business, and maybe I'll come into Trinidad or St. Lucia and open a branch. Okay? So, de-risking, in my opinion, has the potential to, again, wipe out small players. The other problem I have with de-risking is that it's just not fair. You say it's not a desired effect, but no one's doing anything about it. The IMF writes papers on the impact it will have on our economies, and they do nothing on Washington about it. The lobby effort isn't there. It seems like no one cares. And that's another negative side about it, because it's so technical that no one in the economy speaks about it. So that's another down point for me. But silver lining wise, and I'm going to really reach here, because it's not really a positive thing, but I guess we can say it's positive. It has us speaking, you know. We here at this forum today, speaking about de-risking, 60 people going to know about it and going to walk out of here and probably Google it. And then they're going to mention it to one person each, so that's another 60 that's going to know about it. And people are going to start asking tough questions around de-risking and where do we go next. So I guess that's a positive. It's a new thing to talk about. The other positive thing about de-risking is that it's forcing bankers to become more innovative. I mean, I go to some meetings and it's the same old vanilla deposit and loan products discussion and where we're going to go and what more promotions we can do. With de-risking, it's forcing us to think, how can we survive if we get de-risked? We're actually talking as institutions and coming up with new ideas to bypass the US banking system. And without de-risking, these conversations would not be happening. So there's some excitement around that. The other positive that I think de-risking poses for small economies and for our islands is that I think that de-risking could do for us what CARICOM could never do. I think de-risking can bring the Caribbean closer together. I think de-risking can create a powerful Caribbean financial institution that will bring our peoples and our economies to that true state of oneness. Because without the US banking system, how do we import foodstuff from Trinidad? We have vibrant trade with Trinidad, Barbados, and Jamaica, which must continue. And the whole talk of de-risking will cut off these traditional financial channels, but they must go on. So in looking at that, there are mechanisms that we have started talking about and started putting in place that will really continue trade in the absence of access to the US market. One that I'm very excited about is something that the Central American countries have done via their central banks, where they no longer clear in the United States of America, but they clear in the Dominican Republic at the central bank there. So a merchant in Costa Rica seeking to buy products in, let's use Dominican Republic, yeah, will deposit those funds at their central bank. Their central bank will transfer it to the central bank in Dominican Republic, who will then transfer it to the commercial bank of the supplier, completely bypassing the United States and traditional correspondent banking channels. Our Caribbean Banking Association has traveled to Dominican Republic and Central America to meet with these central bank officials, to understand how they set up their system, so that we could mirror it in the Caribbean. And the aim is not only to mirror it and set it up in that way, but to also at a future date merge with the Latin American model. That's a good question. It's bankers, it's central bankers, it's bureaucracies. I'm stretching for the silver lining. It will take a long time. But at least it has us speaking about it, because we haven't spoken about it at any other time in our history. It will take some time, but I'm encouraged by the conversations. And what we should note is that as the de-risking threat becomes greater, the impetus to get it done also becomes greater. So we're at a good place right now with regards to those discussions. The other point is around, I would say, de-risking has made our regulators extremely innovative. Yeah, I was shocked to hear the governor of the central bank even mention the word Bitcoin. I don't know how many people are familiar with Bitcoin and cryptocurrency and blockchain, but in short, what it is, it's moving currency around the globe outside of the banking system completely. And here we have the OECS regulator excited about the prospects that Bitcoin and cryptocurrency present in the face of de-risking. Without that de-risking threat, Bitcoin would not be a discussion point at a central bank. So you have some silver linings. I do have my concerns about Bitcoin being the silver bullet, because regulation does not sleep. It may be slow, but it always wins in the end. So innovative technology and payments systems will run ahead of regulation only for so long. Eventually, it will get regulated, because it's in the interest of the global players to have it regulated. Just this morning before coming here, I was reading a story that Bitcoin futures are now going to be traded on Wall Street. So it's the beginning of regulation, if you want to see it that way. So we still have to innovate, we still have to think, and it's harnessing the best brain power of our Caribbean people. And that's what makes de-risking exciting, if you want to say there is a silver lining and an upside. It's getting the best out of our people, and it's forcing our regions to come closer integrated. I think the new edition of the Business Focus, there's an article in there where the head of the economic space for Latin America is calling on the Caribbean and China to partner closer with them to do more business. That holds another opportunity for us in terms of bypassing the US economy again completely.
We've now come to the end of today's special edition of First National Banknotes on the annual Stanley Friend Shareholder Education Forum. I hope we all got a better understanding of what de-risking is and how we can play a part in helping to avoid the negative impact on financial inclusion caused by de-risking practices. Don't forget we're open every Saturday morning from 8 a.m. to 12 noon at our various locations. You can view this show again right here every Sunday on Calabash TV at 8 p.m. or visit us online at www.firstnationalbankonline.com. Hope you enjoyed it. I'm Sheridan Plummer. See you next time. And remember, First National Bank is here for you.